Imagining waking up one day to find out your mortgage payment just jumped by $1,000. And it's not because you moved and it's not because you upgraded, but because the deal you signed 5 years ago just expired. And that's what's coming for hundreds of thousands of Canadians in 2026. They don't see it yet, but it's baked in. And when it hits, it won't just hurt homeowners, it'll shake the whole housing market. I'm breaking it down, who's at risk, where it's already started, and what you need to do before it's too late. Hit like, subscribe, and stay with me to the end because no one's talking about this. Oh, but they will when it's too late, unfortunately. Let's start with the math they don't want you to see. From the years of 2020 to 2022, millions of Canadians locked in mortgages at 1.5% to 2%. Now, they're staring down at renewal rates between 4.5% and 6%. Sounds like a normal cycle, right? Wrong, because this time the entire system locked in at once, and the resets are coming in one giant wave. Over 60% of Canadian mortgages are set to renew between now and the end of 2026. And that's not a forecast, that's already locked in. A smaller wave is hitting right now in 2025. But the real impact, well, that lands in 2026 when nearly half of all mortgages will roll over. And most of them were locked in during the ultra low rate frenzy of 2020 and 2021. They went in at 1.5% or 2%. Now they're coming out at 5%, maybe even 6%. This isn't a drip, this is a detonation, and the clock is ticking. Now let's talk about what this actually does to a real person. So let's say you have a $500,000 mortgage. At 2%, your payment was around $2,100 a month. Now you're renewing at, let's say, 5.5%. You're looking at $3,100 a month. That's $1,000 more every single month with no renovation, no upgrades, and no new space. Just the same house at a higher price. And no, your salary hasn't tripled to cover that. Let me tell you about a couple I know in Richmond Hill. They bought in 2021. First-time buyers, solid income, a young family, and their original mortgage payment was $2,200 a month. They just got quoted $3,020 a month. They didn't change homes and they didn't refinance. They just timed out of a cheap contract. And now they're staring down at $800 a month increase. And their options, well, they can either tighten the belt or sell. And they're leaning towards selling. This isn't just anecdotal. OSFI, the banking regulator, has already warned 76% of mortgages will renew by the end of 2026. And here's the kicker. Many of those borrowers have barely touched their principal. They're on fixed payment variable rate mortgages. All they've been paying is interest. Some of them have negative amortization, where they actually owe more than what they did 2 years ago. When they renew, the entire equation resets and the lender recalculates everything based on current rates. And then boom, there's your payment shock. Let me show you another story. Investor in Mississauga bought a one-bedroom condo in 2022. $2,100 a month mortgage, variable rate, fixed payment. The rent was close to break even, so they held. Now it's 2025. The lender is recalculating. Their new payment, $3,300 a month. Rent hasn't gone up, expenses hasn't gone down. They suddenly are bleeding $1,200 a month. They're listing the unit next week. And this is happening across the country. Mortgage delinquencies are already up 43% year over year. Missed payments in Toronto and Vancouver, well, they're up 22.7% just in the first quarter. And we haven't even hit the peak of the renewal wave yet. So let's be clear. This isn't about fear. This is about math. We've never had a mortgage cycle where this many people renewed into this much pain at the exact same time. And most Canadians still think they're safe because they're locked in a great rate. But you're not safe. You're just sitting on a countdown. The trap is time, because when the 5-year term ends, there's nowhere to hide. So what happens next? Well, there's going to be more forced listings, more investors dumping inventory, more buyers waiting on the sidelines, and yes, downward price pressure, especially on condos and highly leveraged homes. And the banks, well, they're already preparing. They're increasing loss provisions, they're tightening approvals, they're quietly calling in equity and limiting HELOCs. So if you're waiting for someone to do something about this, you're already too late. So let's talk about solutions because you still have time to act. If you're a homeowner with a renewal in 2025 or 2026, you need to start shopping your renewal now. Don't wait for the letter to just show up. Talk to a mortgage broker, not just the bank, and look at extending amortization to lower your payments. Consider downsizing or selling before you're backed in a corner. And if you're an investor, stress test your portfolio at 6.5% or higher. If it doesn't cash flow now, it won't later. Sell underperforming units now, not after the value drops. And if you're a buyer, use this market to your advantage. There will be pressure. There will be listings. There will be motivated sellers who can't hold on after the reset. The reset is your warning and your window if you're smart. Because the reality is, a lot of homeowners won't make it through this, not because they were irresponsible, not because they were over leveraged, but because the system changed the rules mid-game. One day you're paying $2,000 a month, the next it's $3,000, and no one asked if you can afford it. If your renewal is coming up, leave a comment. You already got a quote and you are shocked by what the new rate is? Share it with us. And if you're thinking about selling, reach out to us. Look, you're not alone, but you do need to move wisely. Like this video, subscribe for more of the truth no one else will tell you, and send this to someone who still thinks they're safe just because they're locked in. And next week, I'll show you how to refinance smart, reduce stress, and stop this reset from destroying your peace of mind. Thanks for watching. See you in the next one.